Believe it or not, it's already been 5 years since Post Holdings spun off its active nutrition brand portfolio to create BellRing brands. But while being nostalgic can be fun, I'm more interested in pondering what the next 5 years could look like. So I'll provide a collection of forward looking insights in regards to the introductory statement a bit later in this content. But on November 19th of 2024, BellRing Brands updated the public markets by releasing its fiscal 2024 fourth quarter earnings report that covers the period ending September 30th of 2024. I'll be utilizing the financial information within those documents along with the notes I took while listening to the earnings conference call and any relevant publicly disclosed news to obviously update you on the recent performance of brands in that functional CPG portfolio, but also use it as a backdrop to discuss market insights within the active nutrition formats of liquids and powders. But let's start off with a quick rundown of the BellRing Brands fiscal 2024 fourth quarter revenue numbers. Net sales for BellRing Brands this quarter were $555.8 million. That is up a fantastic 17.6% year over year, which is comprised of a positive 18.9% increase in volume, but it was offset by a 1.3% decrease in pricing and product mix. If we're looking at a quarter over quarter perspective, BellRing Brands saw its revenue increase slightly under 8%. Looking at the quarterly sales by brand, Premier Protein was up 20.3% year over year. This came from a robust 19.5% volume increase and a small increase in pricing and product mix. If we focus on just the Premier Protein RTDs, that product format saw net sales increase 20.7% year over year, driven by a 19.6% increase in volume and a 1.1% increase in price and mix. Now shifting to the Dymatize Nutrition brand, it saw quarterly net sales increase 3.9% year over year. This was driven by a 6.7% increase in volume, which was partially offset by a 2.8% decrease in price and mix. Volume gains came mostly from the strength in the international channel, and the decrease in price mix was driven by promotional activity and an unfavorable product mix. Since this is the company's fiscal fourth quarter, I want to quickly run through the annual performance as well. In the last year, BellRing Brands had revenue that was just a hair short of $2 billion, which was up 19.8% year over year. And as you could probably assume, these same trends carried over from these quarterly results, but let's dig a bit deeper on those annual revenue numbers. If you wanted to break them down by brand, Premier Protein would make up about 85.4% of the total sales, or $1.7 billion. Throughout the fiscal year, net sales at Premier Protein increased 22.9% year over year, driven entirely by volume growth and partially offset by a decrease in price and mix. Dymatize would make up 12.4% of the BellRing Brands total sales, or $247.5 million. Throughout the year, net sales at Dymatize increased 5.6%, driven entirely by volume growth and partially offset by a decrease in price and mix. If you wanted to break those sales numbers down by product format in fiscal 2024, RTD shakes made up 81.1% of the total sales. Powders were 16.4%, and then the remaining 2.5% came from other formats like nutritional and protein bars that are sold internationally under the Power Bar brand name. And speaking about geographical revenue, the United States represented about 89% of the total revenue throughout the fiscal 2024, but of that remaining approximately 11% of international revenue, Canada makes up about 2/5 of the total foreign sales. But let's jump back into the fourth quarter insights. And as I constantly do in these quarterly BellRing Brands content pieces, I want to dive deeper into firstly the Premier Protein RTD shakes business activity, and then also cover the protein powders for both the Premier Protein and Dymatize brands. Overall, the RTD liquid subcategory of convenient nutrition has shown extremely strong growth during the 2020s compared to historical rates. And while Premier Protein has benefited greatly from that, it has also faced its share of episodic challenges during that same period, from severe capacity constraints that limited available flavor variants and usage of trade promotions to even a voluntary product recall. But Premier Protein has been able to overcome each efficiently, as they are some of the best operators within the functional CPG space. In terms of retail consumption growth by channel, The largest of Premier Protein RTDs would be Wholesale Clubs, which was up 4.4% year over year during this quarter. But the brand's other major sales channels blended up that wholesale club performance, with mass retail growing 26.4%, grocery up 31.4%, and e-commerce growing 27.6%. Overall, Premier Protein RTD's consumption trends for both tracked and untracked channels were up 14.4% year over year. Yet that quarterly performance still dragged down the last 52-week consumption trend, down from just over 25% last quarter to now just under 20%. But Premier Protein does have the number one velocity SKU across the entire RTD liquid subcategory, and 80% of its products rank in the top third of that convenient nutrition format. And even with consumption increasing quarter over quarter, strong shake production allowed Premier Protein to rebuild trade inventory levels. With that improvement in stock, along with increased distribution, helped Premier Protein end the quarter with total distribution points reaching all-time highs. Household penetration for the entire Premier Protein brand reached an all-time high of 19.4%. This recent brand household penetration growth is being fueled by brand advertising and promotional activity restarting, with the latter bringing deal-seeking buyers back towards the Premier Protein brand. Moreover, it's important to note that Premier Protein does lead the entire convenient nutrition category in household penetration and outpaces the next RTD liquid subcategory competitor by more than a handful of percentage points. Premier Protein market share spiked to over 25% during the fiscal second quarter's wholesale club promotions, but has settled in at about 23% of total RTD liquid subcategory of convenient nutrition. With steady production across the full range of flavors, plus new launches and promotional activity returning, Premier Protein should see its market share climb even further to all-time highs throughout fiscal 2025. But let's now shift into examining the recent BellRing brand's performance of its protein powder SKUs. And just like the RTD liquid subcategory of convenient nutrition, these same underlying drivers have created strong growth within the ready-to-mix protein powder subcategory format. Powders are becoming more mainstream, and category proliferation has created an environment where more consumers are purchasing both everyday and performance nutrition positioned protein products at grocery stores and mass retailers. But that doesn't mean the steep growth trajectory of late within the powder format at those large retail channels will go on forever. Because while I don't mind mixing up a protein shake, it would be silly to overlook the extra friction point for a lot of, at least new to the category, mainstream consumers, thus causing a lower household penetration ceiling compared to RTD liquids. I don't think we're anywhere near there just yet, but it is interesting that ready-to-mix powders growth has slowed compared to the last calendar year. Also, the bulk of protein powder sales are still going to primarily occur online, so I wouldn't apply the same lower ceiling to a multi-channel retail environment. With the BellRing brand's portfolio containing a strong player in both subcategories of convenient nutrition, ready-to-mix powders, aka performance, and everyday, it's benefiting twice from this marketplace tailwind. But let's stick with the Premier Protein theme and break down the performance of that brand's protein powders first. As you can see, Premier Protein powders are charging hard, up just under 43% year over year in the quarter, behind brand investments, distribution gains, and strong velocities. Premier Protein powders continue to bring new mainstream consumers into the category, creating growth at both mass retailers, up 60.5%, and e-commerce, up 38%, but also well above categorical performance in grocery, up 21%. Furthermore, BellRing brand's leadership stated on the earnings call that internally they're getting really excited about the opportunity emerging with Premier Protein powder SKUs. They have proven to be both incremental to RTD shake sales and beneficial towards growing the brand's household penetration. Premier Protein powders reached about 2 points of household penetration, but don't really scoff at that number because it has already surpassed the same metric from Dymatize. Though that's not a like-for-like comparison, because Premier Protein is a much more well-known convenient nutrition brand overall that's now getting deeper into powders. Alternatively, the Dymatize brand is a lot narrower, focusing on the more sophisticated performance consumer. But maybe this is a good time to transition into analyzing the recent performance of the Dymatize protein powders. As mentioned earlier, categorical growth within large retail channels has greatly benefited a brand like Dymatize that's strategically aligned from a sales channel strategy perspective. Dymatize is now the top selling or second ranked performance protein brand in most of its key retailers. That being said, retail takeaway trends have been sliding the last few quarters, and all sales channels besides mass saw negative growth this quarter. And I want to make a note on the decline in wholesale clubs. And while this is totally anecdotal at this point, I believe the launch of Costco's private label protein powder will be quite impactful to a brand like Dymatize. Yes, leadership has said that Dymatize is a premium brand, and I agree, thus not competitive with private label. But you have a very fixed merchandising in wholesale clubs for protein powders outside of when they flex up space around New Year's. So if Kirkland Whey Protein is successful, it takes away an available year-round slot that might normally be filled by a performance nutrition brand like Dymatize. But for the last 52-week period, the only other material retail takeaway blemish comes from the specialty channel. And I know that might be shocking for all you old school sports nutrition industry professionals that remember Dymatize from the 2000s, but this shrinking sales channel is no longer a major priority for the brand. And I fully expect that specialty will continue to struggle from a comparative standpoint into the future. Overall, despite this quarter's softness, continuing marketplace tailwinds such as performance nutrition powders becoming more mainstream and overall category proliferation helped Dymatize sustain its total distribution points and all commodity volume percentage that has been hovering around all-time highs for the brand. Yet, I'm not sure that setup helps lessen the worries around what it could take strategically to get Dymatize back into consistent growth mode. And then next, let's quickly shift into a operational update for BellRing Brands. Gross profit margin in the quarter was 36.9% of net sales, which was up strongly at 480 basis points improvement year over year. This higher gross profit margin was driven by net input cost deflation. In terms of sequential quarter over quarter gross profit margin, that was up 10 basis points higher. Additionally, BellRing Brands has been executing on a multi-year Premier Protein plan, partnering with the biggest and most reputable players in the industry to make large CapEx investments, which has now given them a scalable, regionally diverse supply chain that should enable many years of robust growth. But maybe that growth outlook comment makes for a good transition into what I was talking about in that introductory statement. And it wasn't until the BellRing Brands CEO shared on LinkedIn that they were ringing the New York Stock Exchange bell in honor of their anniversary that I realized it had already been 5 years since Post Holdings spun off its active nutrition brand portfolio to create BellRing Brands. So maybe it would be a bit fun to get a little nostalgic by sharing some of my thoughts from 5 years ago. BellRing Brands has benefited from a lot of different consumer macro trends. First one is mainstream consumer are increasingly focused on consuming healthier food and beverage alternatives, and specifically on increasing protein in their diets. And that's regardless if Americans actually have any deficiency in protein. I don't think they do, but regardless, protein out of the macros, if we're talking fat, carbs, and protein, is the one that gets villainized the least. So people are always kind of very positive towards protein, thinking they need to add more protein, even if they're not in any type of deficiency. And then finally, just around the snacking trend, consumers are just eating more frequently throughout the day. So those trends overall have lined up perfectly for BellRing Brands, being that a lot of their business is geared towards the convenient nutrition category. And I don't see any of those trends, those macro trends, really changing over the next couple of years. So I think there's going to be a ton of runway for BellRing Brands to grow, especially if they can stay ahead of the ever-changing consumer demands. And I typically don't talk about the stock performance, but for shits and giggles, if you purchase BellRing Brands stock during that initial mid-October 2019 IPO timeframe, you'd be up around 300%, which I believe would beat the S&P 500 return by almost triple. And that makes logical sense if you also consider that BellRing Brands revenue has climbed from around $850 million in fiscal 2019 to $2 billion in fiscal 2024. Moreover, this was accomplished through organic growth, not M&A activity. In fact, BellRing Brands has even cut or deprioritized brands and products from that initial IPO brand and product portfolio. In fiscal 2019, brands like Supreme Nutrition, Joint Juice, and Power Bar accounted for about 10% of the total sales, or about $85 million. As mentioned earlier, the other brands only make up slightly more than 2% of the total sales now, which means an overall retraction in revenue by about half. So that means over $1.1 billion in organic growth was generated by Premier Protein and Dymatize in the last 5 years, with more than a billion of that being accredited to Premier Protein, growing revenue at about 160% over that period. Similarly, the vast majority of growth from a format perspective came from protein RTD beverages. The remaining $200 million in growth over the 5 year span was created by focusing on the powder format and essentially abandoning the bar format. And then finally, BellRing Brands had deepened but broadened its key customer risk. At the time of the IPO, BellRing Brands generated about 70% of its revenue from Costco and Walmart, which includes Sam's Club. During fiscal 2024, the brand portfolio's largest customers were Walmart, which includes Sam's Club, Costco, and Amazon, accounting for approximately 75% of its total net sales. But even if that historical recap was enjoyable, I'm sure you guys are most interested in my logic surrounding what could happen to BellRing Brands over the next 5 years. And we can knock out the easy prediction stuff by starting where I just left off. Even if BellRing Brands goes down that national DSD strategic partnership path with somebody like KDP that I've talked about previously, the key customer risk will continue with Walmazon and wholesale clubs. Yes, BellRing Brands will deepen its existing customer relationships and continue expanding across channels, but those retailers are the most powerful in terms of categorical volume, especially with multi-pack protein RTD beverages. And DSD would help with additional placements selling singles in those coolers at those retailers. Similarly, unless there is a significant M&A transaction, BellRing Brands will become more concentrated on Premier Protein and the protein RTD beverages format. While Dymatize should continue to grow past the $300 million range by the end of fiscal 2029, Premier Protein will most likely be a $3 billion brand with minimal innovation and benefiting from continued long-term secular trends in the category and overall consumer behavior. So if you're doing the quick napkin math, that would imply a low double digits compounded annual growth rate that reaches about a $3.5 billion revenue rate projection wise in fiscal 2029. Now, what could materially increase that 5 year revenue projection obviously would be from a change in distribution strategy, either geographically or national DSD strategic partnership, successful format or occasion innovation, and then M&A activity. In terms of likelihood, I actually think all four scenarios are highly probable in the next 5 years. Firstly, international expansion has been a BellRing Brands growth strategy since before the IPO. So with convenient nutrition becoming more popular globally, it only makes sense if they start prioritizing geographical expansion with Premier Protein. Secondly, and I won't go through that national DSD strategic partnership scenario again, and instead just ask that you watch my previous deep dive content from last December. Next, BellRing Brands has been messing around with a few non-beverage Premier Protein formats through licensing partnerships. And while not a material impact to the business yet, licensing efforts in frozen pancakes and waffles and then cereal have provided key indicators that could prove Premier Protein has platform brand power that extends beyond the healthy living sets in retailers. So without a doubt, BellRing Brands takes a few big innovation swings over the next 5 years to really test that Premier Protein platform brand power. If none of those big innovation swings provide material growth, I'd expect BellRing Brands to look for a splashy M&A opportunity that fills that need going forward. And then speaking of pursuing value accretive acquisitions, this is another growth strategy highlighted in that IPO paperwork that hasn't been leveraged yet by BellRing Brands. Though this might change relatively soon for several reasons. Firstly, and maybe most broadly, consumers can't seem to get enough of protein. The focus on high protein diets started in those shadowy niches of sports nutrition and weight management, but now there's increasingly diverse consumer cohorts that possess a heightened awareness around the value of this essential macronutrient. Secondly, and related, that demographic diversity being interested in high protein diets for different reasons is making protein a battleground category as it proliferates across the entire grocery store. Thirdly, the diamatized growth story from the last few years had allowed BellRing brands to shift M&A needs from must have to nice to have, but that seems to be ending now. Additionally, you had a major convenient nutrition brand portfolio competitor that just made a strong mergers and acquisitions move, acquiring the fastest growing protein RTD liquids brand, OWN. And then finally, plant based protein sales have again been strong, holding their own against dairy based counterparts because top products have advanced to a point where consumers feel they have near parity in terms of flavor and texture. So, what does this all mean? The same thing I referenced in that 2019 IPO content and probably every year since, which is that BellRing Brands needs to find a leading plant-based protein brand to fill a portfolio gap. Like what Simply Good Foods is doing with OWN, it would be an easy bolt-on that gets almost instant lift. And I know what you and BellRing Brands leadership are collectively thinking though. Premier Protein has tons of untapped product innovation potential and can easily be extended into plant protein. But I think broadening inputs, especially in RTD format, is a mistake. Yes, Premier Protein has a lot more upside in that brand, but the portfolio overall lives and dies on its performance. So I'd keep it focused on the competitive dairy based protein beverages market that has an interesting market setup brewing over the near term. And then finally, you probably want me to tell you that BellRing brand stock will again triple in the next 5 years, but I'm far from intelligent enough to predict something like that. But I hope you enjoyed the first principles thinking that went into my latest YouTube video. If you did, can you do me a favor by hitting that like button? That quick and free action helps YouTube know my content is worth spreading to more people. Also, we're getting really close to reaching my next subscriber goal, and it would be great if you join me on this journey. But to do that, we need to fix the fact that slightly more than 3/4 of you that are watching this video right now are not subscribed to my YouTube channel, and that hurts my feelings. Regardless, I want to thank you for giving me some of your attention and time, and I'll see you on the next one.